In today's topic, I really mostly want to focus on the differences between polymarket trading versus leverage trading. But before we get into that, I just wanted to show you like how much progress we are making. For example, in the past 24 hours, I've made literally around 3,044 US dollars. And Polyco is a very good app that you can use in order for you to copy trade many powerful traders such as myself. So yeah, check it out in the link below. So anyhow, what I really wanted to focus on is like we talked about the major differences, and I had to ask ChatGPT so that I can have this summarized version for you guys, especially those of you who want to transition from margin trading and you are probably trying to figure out whether polymarket trading is worth it. So overall, there are several major differences, and this is one of the reasons why if you are trying to get into this, you have to consider the market conditions that really give you sort of an edge. For example, if you have a trend which is coming to an exhaustion, right? If you anticipate that the price is going to retrace and probably start a new trend, then trading on Polymarket is obviously going to give you the best return on investment, because depending on what type of level you get in at, you are most likely going to be able to get undervalued shares, and this is going to help you have a better return on investment. So according to this, right, Polymarket uses a binary prediction methodology. You only have to choose up and down, especially if you are focusing on BTC up and down. And by the way, this is primarily going to be addressing people who are interested in trading polymarket BTC up or down. So for example, this is polymarket BTC up and down. This is all you need to do. You have to choose what type of outcome you're looking forward to. If you have a price to beat, which is around 72,890, then you either have to choose up or down. So now the advantages of that is there is obviously a fixed payout, there's a limited amount to lose, and there's obviously no liquidation. Liquidation only happens if the price, or rather the timer, in this particular case, right, when we go to crypto and we look at the daily time frame, we obviously have a timer which acts as a liquidation zone or a liquidation time frame. So if you are trading and the timer runs out, you are definitely going to lose all your money. All your money is basically going to go out, and this is one of the reasons why I mostly focus on 24-hour prediction markets or the weekly time frame market. Of course, there are people who are trading the 4-hour prediction time frames, and those are very, very skillful traders, if I can put it this way. So one thing that you have to ask yourself is, what type of trader are you? Are you a directional trader, or you are a trend trader? So basically, two traders are going to make money based on their skill level or their prowess, if I can put it this way. And this is one of the reasons why, if you are very good at directional bias, then trading on Polymarket is obviously going to be easier for you. So directional bias, if this is your strength, right, then you are obviously going to do very, very well. So let me just highlight that for you, change the color, we make it quite visible. So directional bias, it's giving me the same old color. Okay, and you also have to be good at trend trading. So if you've got a very good sense of directional bias, probably Polymarket is going to be a very good alternative for you. But if you've got very good amounts of skills when it comes to identifying the types of trend reversals, and so on and so forth, then obviously margin trading is going to be very good. So now let's look at some practical aspects of the trading scenarios that we could have had. So right now we're looking at BTC, right? 24 hour time frame, which is a daily time frame. Now take a look at this mess right over here. So the reason why I really want you guys to focus on the directional bias versus the trend trading type of traders is it's going to allow you to have certain different strategies. If you were to ask me, right, what I usually do is I use both. I use prediction markets and margin trader. I'm not only single sided. I'm not a one trick pony when it comes to these types of trades. So I incorporate both trading strategies because we've got different trading conditions. And for example, let me just give you a very good explanation right over here. So when we have an imminent trade, right, for example, this particular level was a downtrend, a very prominent, very precise, and very accurate downtrend. Anybody can figure that out, right? So when you have such a situation, if you didn't really get this level, right, if you didn't bet opposite, because you have to remember that these shares have got different price points. For example, there's 31, there's 70% right over here, right? So the value of your share is going to determine how profitable you're going to be and how much you're going to be able to redeem. So for example, if you buy up at 0.42 shares, right, if BTC closes higher or below your prediction time frame, your share becomes 1. So if you happen to be right, your shares are going to be redeemable at $1, and that means you're going to be able to make 58 cents per share. If you're wrong, you're going to be able to lose that those shares that you bought at 42 cents per share. Therefore, your maximum loss is always your stake. Daily BTC up and down shares are binary contracts that settle to $1 for the correct outcome and $0 for the incorrect one. So this is very important right over here. And of course, the advantages of prediction markets are there's no liquidation, they are easy to understand, the risk is obviously fixed, and this is obviously suitable for traders with a directional bias, as we talked about. Now, the disadvantages include that the profits are very much limited. Profit is capped. Even if BTC moves massively in your direction, you still only have to receive the fixed payout. Now, this point leads me to the overall explanation that I was trying to point out in this particular level. So how I use prediction markets is I mostly pinpoint reversal areas where I know that the market is going to trap traders. Okay, trap traders, have a fake out and continue in the intended direction, in the intended trend direction. This is where you're going to be able to make the most amount of money, and you can literally get a 3x, a 2x. For example, in this particular case, right, if you buy shares at 42, so that means you are literally making over 100% in profit. And sometimes the shares might drop as low as 10 cents, 7 cents, but if you are able to pinpoint these turnaround levels, these are the levels that are going to be able to help you make the most out of prediction markets. So basically how I look at prediction markets versus margin trading is prediction markets is more like cross margin trading. I hope you guys have heard about cross margin trading, right? Because there's cross margin trading and isolated type of trading. So prediction markets are very, very similar to cross trading, because the only difference between cross margin trading and prediction market trading is prediction market trading is capped at $1. Okay, so for example, if you get in at 7 cents, so you have cross margin trading all the way up to $1. So your 7 cents goes to about 99 cents, and therefore your margin is not your portfolio is not going to grow further because it is capped at 99 cents. Now, in this particular scenario, right, if you are able to get in on undervalued shares, emphasis on the undervalued shares. One of the only reasons and ways you're going to be able to get undervalued shares is when it is not apparent. When you have these types of FU moves, or when you have these trapping type of scenarios. So you get in and you get to make a lot of money. Then during the incoming prominent trend days, you just simply go for aggressive shares with regards to the direction of the trend, and you guys are going to be able to make a whole lot of money. Okay, so if you guys are going to be able to um make sure that your time frame, your timing is very accurate, right? And it follows with the direction of the market, then you are obviously going to do very well, because there are going to be moments in the market, or rather during the market cycle, when prediction markets are going to be way much more lucrative. For example, you get in at this trapping of the bears, and the price makes a huge reversal, you're obviously going to make way much more money than when you have days where the price is obviously in a very pronounced, defined direction or trend direction. You understand? Because everybody's going to be trading, or rather predicting that the price is going to go in that expected trend direction. So obviously the shares are going to be very overvalued, and you're not really going to make a whole lot of money. So during such type of market, trend direction, when the trend is obviously prominent and it has already been defined, all you have to do is focus on margin trading, because you have unlimited upside and you can literally be able to make way much more money, especially if you are able to have a very low liquidation level. So I hope you guys understood the basic explanation of when it is much more profitable to trade prediction markets versus margin trading. So what I usually do is I usually go for both. So I've got money, a limited portfolio in prediction markets, which is on Polymarket and all these other trading bots that I'm using. Then I also have money, which is obviously on Binance. So if you guys want to, trade with me either on Binance or Polycool, which is the app that I showed you, then you can obviously check out the link in the description. Then I also teach people on how to get good at trading reversals and just basically figuring out how to spot liquidity trap zones, liquidity zones, fair value gaps, fair value areas, and all that good stuff. So this information is really going to help you make a whole lot of money. And remember, 7 months ago I literally started with around $20 in my Polymarket portfolio, and we have increased it to a whole lot. So let me show you. Let's get back to this. So obviously now the portfolio has pumped from about $20 to around 76,000 US dollars in a span of around in a span of around 7 months. So we really took out a lot of money from the markets, and we were able to take advantage of market trends. And this is one of the reasons why it's very important for us to trade the markets and just basically see what is happening. So yeah, take a look at this. Check out my previous videos, and you guys are going to learn a lot. So yeah, I hope you enjoyed this one. See you a little bit later. Subscribe, and I will see you in the next episode.